Are you looking to retire early but wondering how you're going to pay for healthcare costs? We can help.
We're Shannon and Michael. We're with Healthcare Genius, and today we're going to answer all your questions about what happens if I'm retiring early, not yet 65, what do I do? The first question that people have is, if I am not yet 65, can I sign up for Medicare? Short answer is no. Unless you're disabled, you're not eligible for Medicare until you are 65. So first question for you, Michael. All right, then what do you do?
You know, it's tough. A lot of people will take COBRA from if they have employer coverage previously, then they're going to sign up for COBRA and pay whatever those premiums are. Those can be expensive depending on the plan that your employer offers, but that tends to be the first step that people take. And then secondly, individual health insurance is another area that is available in a lot of people once they maybe exhaust their COBRA, or if COBRA isn't attractive, then they can look at the individual side.
Gotcha. And if you're self-employed, for example, COBRA is not going to be an option for you generally.
And another area that people aren't necessarily aware of, but if your employer, just to be concerned about with COBRA, so you can access COBRA until your employer drops their insurance coverage completely. So with COVID, you know, with companies going out of business and maybe dropping their health insurance plans, that does impact COBRA. So a lot of people who maybe were on COBRA now have to look for individual plans. The good news, though, is depending on what state you live in, whether you're on the federal exchange or like here in Colorado, we have our own state healthcare exchange. You can go on to those exchanges, and depending on where your income is, you may be able to qualify for subsidies. So an individual plan on the exchange may actually be a lot less expensive than COBRA or just a straight individual plan off the exchange. So you want to definitely take a look at what those options look like.
Yeah, absolutely. And one good thing that we're seeing here in Colorado is that some of those individual plans are actually a lot lower than they were maybe a couple years ago. So could be a good option for you if you either can't take COBRA, or if you're just deciding between the two. Check out what is available to you on the exchange, and again, if you have any subsidies that you're eligible for.
Another area that kind of people sometimes look at are part-time jobs that offer health insurance. So Starbucks traditionally, if you work over a certain number of hours, has offered health insurance for their employees. I'm not sure what those rules look like now, but there are companies that do that. So, you know, maybe you decide to be a barista for 24 hours a week and get your insurance paid for, or at least part of it paid for. You know, there's a lot of other areas that you go outside of just working full-time for somebody or buying individual insurance out there.
I mean, it's a legitimate concern. I think a lot of times there are a few things that people don't realize when they're on a group health plan. The number one thing is maybe how much their employer is helping pay for them. I mean, Michael, you've been doing group benefits for a long time. What would you say the average amount is that employers help pay?
Oh, you know, probably certainly in our Denver market, it would be 70 to 100% of the employee rate. Yeah. So we have tended to be pretty generous here just because of the competitiveness of the job market. Now, again, some of that's changed with COVID, but we still have a lot of employers that are doing that. I think a couple of other things to think about is if you are retiring early, maybe you're going to be traveling after, again, we get through this period of time, is to look at coverage for out of the country. So those tend to be short-term international coverage plans, but those are important to have so that you're not having to hit your deductible here. They'll have their own deductible and actually would even cover you for being able to come back into the country. So again,
and these policies are really cheap. So we always recommend if you're leaving the country for any period of time, make sure you get travel insurance. It's always a great idea.
Yeah, and a lot of early retirees look to travel when they're doing that. That's one thing. Certain states, we don't have them in Colorado, but certain states also have short-term medical plans, which are really designed to be catastrophic. Some of them don't necessarily cover everything. Some of them are underwritten, so you have to qualify from a health standpoint. But those could be an option too for somebody who's retiring early and maybe feels like they have the wherewithal if something bad happened to pay the upfront deductibles, but they're just worried about kind of a worst case scenario.
Yeah, I mean, when you're looking at either an individual plan or COBRA, you might look at it and say, wow, that's way too much. What are my other options? Can I self-insure? What's your take on self-insuring?
Yeah, I would never self-insure for health insurance. We have a friend who happened to be riding a four-wheeler out in Montana and wrecked it. His medical bills are in excess of $2 or $3 million. Now, he certainly has the wealth to be able to pay for that, but that's a big chunk of change to have to pay out of pocket. So definitely, we would not recommend self-insuring health insurance, especially for somebody who's in their 50s or 60s, where we know that things can happen as you get older.
Yeah, absolutely. So if you are under the age of 65, those are kind of your options. I do want to point out that once you do turn 65, congratulations, you're eligible for Medicare. Now, for a lot of you, if you are fortunate enough to retire early, that may also mean that you have a higher income, and it may mean that Medicare is going to be very expensive for you. The bad news is, if you aren't on any kind of group employer coverage when you turn 65, you have to sign up for Medicare. You can no longer have the option to have COBRA or to have an individual policy. So yeah, there you have it. Anything else you want to add?
No, I think, again, just understand that there are options. It shouldn't necessarily keep you from retiring early. I guess the other thing is that for some people who maybe have high medical expenses or they take really expensive prescriptions, it may not be an option to retire early. You may have to wait, or may want to wait, just because of the fiscal challenge it presents for having to pay some of those things out of pocket. So.
Yeah, absolutely. And then if you're married, it just kind of doubles the problem, or can, again, depending on your health situation.
I think the key is, though, talk to somebody who's knowledgeable about healthcare. Mm-hmm. A lot of financial advisors understand wealth management, but they don't necessarily understand healthcare. So make sure you get the opinion and talk to people who are in the business, that they do this all the time, and get ideas. And again, we say this to everybody: plan ahead. Mm-hmm. Don't wait until 30 days out from your retiring to start looking at what you're going to do.
If you have any more questions about early retirement and what that means for your healthcare costs, feel free to let us know in the comments below, and we will answer all your questions. We're always here to help. Again, we're Shannon and Michael. We are with Healthcare Genius. And subscribe to our channel if you haven't already, and click the notification bell so you know when we come out with new videos.